All right, well, to take us through the markets, I'm joined by Martin Smith. He's a portfolio manager at Anchor Capital. Thanks very much, Martin, for joining us. So locally on the JSE, we do see that the market has been weak. Just give us your broad analysis of what's happening generally and what's driving markets.
Yes, I mean, you're absolutely correct with regards to kind of the way we ended off yesterday. Today's a little bit stronger. I think we also need to put into context where we have been over the course of this last year. I mean, over the couple of months since this year, is you've seen global markets experiencing quite extreme sell-offs, while the JSE has held up relatively well. We've also bounced back quite hard after initial sell-off after the Ukraine-Russian tensions kind of flared out as well. So the JSE has been very, very resilient in a global context this year. You've also had quite an interesting scenario where you've seen the rand strengthen at the same time that kind of global markets are selling off, which we don't often see. So yeah, we had a little bit of weakness, probably on the back of a slightly weaker rand yesterday, but we're bouncing back up nicely again today along with the rest of the world as sentiment seems to improve, or is seemingly improving, with potential talks of a ceasefire between Russia and the Ukraine.
Yeah, to your point about the local currency, behaving in a manner that we didn't anticipate, that was partly a resource story as our resources were being, taken up abroad and so on and so forth. What is the resources story? Because every now and again, there's a lot of volatility with the resources and we see them being sold down quite a bit. Is there still room for more demand for resources going forward?
Yeah, perfect. So let's tackle the currency question first. So yeah, we saw a little bit of rand weakness come into play yesterday, but I think we also need to remember the context again of where we've come from this year. I mean, the rand was at 16 at the beginning of the year. We're now at 1465, so it's still incredibly resilient. And your point is very well made, that it is largely in the back of resources and the demand for commodities from a very commodity-driven economy like South Africa. So it's largely driven essentially by demand and supply factors, and at the moment it's obviously very, very favorable given kind of the supply constraints we've seen around the world, but also the demand for commodities, specifically out of places like China, where they're looking to ramp up growth quite nicely. So a lot of things at play, but still, I think commodities are still in somewhat of a sweet spot, and some of the commodity players are absolutely producing incredible free cash flows at these levels. So a very, very positive space to have been in, and I think still to continue to be in.
And what about oil? We know that, of course, the oil price hit quite serious highs at the onset of the Ukraine-Russia conflict, but it has come down quite some way, but it's still at dangerously high levels for South Africa as we're a net importer of oil. What do you think is going to be the prognosis for oil as we gear up to paying perhaps closer to 2 rand extra a litre for petrol?
Yeah, it's not a pretty picture, the high oil price, but it comes down to a couple of things. I think let's also remember that OPEC weren't exactly increasing production in line with targets. So you had an oil price pre the Russia-Ukraine incidents that was slightly elevated in any case. So will they come to the party? I mean, indications are, and they're meeting this Thursday, that they're probably going to kind of stay in line with where they've been, which means that we probably won't see an oil price kind of kick a little lower on the back of production being increased. That's the one aspect to look at. The other is what happens again with Russia, Ukraine. I think if that ceasefire happens and everything kind of sorts itself out, I think you could see oil push lower. So a lot of things up in the air, but like I said, we've got to remember oil was still quite high pre Russia, Ukraine, because OPEC still need to kind of find their levels and hit the targets they have been setting for production.
Yeah,
increases.
No, fair enough. And then the last issue, Absa finally announced that they've got a permanent CEO, one Ari Rottenbach. He's been at the bank. He's an internal, recruit to the CEO position. How has the market reacted to this? And how does Absa fare relative to the usual suspects, Nedbank, FNB, and so on?
Sure. So I think market reaction is probably relatively muted, somewhat of a non-event potentially, but it does bring some stability to Absa. And I think we need to look at this appointment as quite a safe one. I mean, the guy's been at Absa for 25 years, so he knows the business, he knows the strategy. It's nothing kind of needle moving insofar as big changes or anything like that. So I think the market will wait and see, but it seems like a relatively kind of safe appointment. With regards to Absa itself, I think it probably comes down to what the banking sector is doing generally in South Africa. I think very much in favor at the moment. You also got money kind of flowing in from other emerging markets. Now that's obviously what's happened in Russia, but our banks are very well positioned. They provisioned well during COVID. You've got an increasing interest rate environment coming on now, which increases their margins, and kind of your transactional banking will also start to improve. So our banks are very, very much in a sweet spot at the moment, and Absa is definitely a beneficiary of that. Still looking probably the cheapest out of the bunch, so you might see a slightly kind of better potential for re-rating in the business. But again, I like the banking sector on the whole in South Africa.
Excellent. Thank you very much, Martin, for your insights there. Martin Smith, he's a portfolio manager at Anchor Capital.